Hey guys, what's up? Today I'm going to be talking about my new trading bot. I'm sorry if the audio is weird. I'm going to be talking about my new trading bot today, and it is called Athena 5. Hopefully you can see this as a tool and not just a hack. And what I mean by that is, don't just use it as a um, don't just use it as a robot. Don't buy on the buys and sell on the sells. I mean, you can do that. You can tune it all day long. Um, but use it as confirmation more than anything. So let's just say you're lining up for a perfect trade and you don't know where to get in, but well, you know where to get in this you're like this general area, and then you tune the bot to basically say, all right, we're gonna go with this one. All right, so I want it to be a tool and not just a hack. Now you can definitely use it as a hack. I mean, I have for a little bit, especially if you're doing it for long-term trading. I mean, it's just so good with long-term trading. I mean, I can't even withstand using it for that. All right, so screen. Sorry if that was kind of loud. All right, so this is what it looks like. It's called Athena 5. So overall, I'm going to talk to you guys about some of the rules. So at the start of every single month, you guys are going to need, sorry, I'd just like to look at it. You guys are going to need to retune the bot. And how you do that is look at the past 7 trades and tune the bot. So you want to go back to settings. I know you can't see this, but just click the Athena 5 and then you're going to see a gear and then this is going to come up. So these are the default settings. So if you're not long-term trading, um, so basically if you're using the day chart or the week chart, use this. Um, but if not, the default settings are fine for most stocks and, just most stuff. So you can see I retuned it for this set of days. Like 1, 2, perfect buys, perfect sells, perfect buys, perfect sells. It does not lose on a single trade anywhere. So, it doesn't lose on a single trade anywhere. But as you can see, as you go farther and farther back, this is why you need to retune it. See, look, that's a crap buy, crap sell. Then there's a lot of errors like this. And then you can see that these are winning trades, but they make false errors like that you can tune out if at the start of every single month you you retune it and you look at the past 7 trades. So 1, 2, and the easiest way you can do that is just look at the sell orders. 1, 2, 3, 4, 5, 6, 7. All right, so now you want to come up to the gear and you want to start messing around with the fine tuning equation. The risk to reward ratio equation is nice, but so if you want better confirmation on stuff, you can see that it doesn't really take a losing trade, but you will make less money off of it. So I like it at 3. At 2 is a little bit much. At 3, it's perfect for me and everything else. Fine-tuning equation, I like it at 660, but you guys can literally change it to whatever. So if I change this to 700, you can see that there's a sell and a buy at the same point. So, it's whatever, but I like it at 660. But here's what it looks like at 100. A little worse buys, worse sells. Um, so I like it at 660. Now you guys can play with that, all right? And then what it says up here is if you're using candles, use HL2. So if I go like that, and then I turn my candles from Helsinki Ashi lines to candles, you can see that they're generally in the same. They're generally sorry, it's at yeah, they're generally in the same area, and by percentage from here to here is the same amount of gains and losses. So it is the same amount. All right, so you're not really losing anything. It's just different. All right, so use HL2 if you're using candles. Then, but I like a low for Helsinki Ashi just because it gets you good buys and good sells. All right. Um, so there's a few rules I need to point out. So now I'm just going to cover how to use it. All right. So how to use it on a base scale. So you can see the buy does not confirm until the next candle. It's something wrong with TradingView. It's not the robot, all right? So don't get frustrated if you can't buy on this one because it flashes, because it's a set of requirements that make you buy here, all right? So you're going to want to buy on the next candle. So it buys on this candle, shows the buy signal. You have 45 minutes if you're on the 45-minute chart. You have that entire next candle to buy, all right? So you can see right there, if I go info and I take the worst possible trade, I would still be up about 3%. But if I got in at an average price, I'd be up 4% currently, and if I got in at a really good price, I'd be up 5%. So they are very, very, very good prices. Just stick with it. All right, and it's the same rule for selling. So you sell on the second candle. So you'd sell right here. I know it's a little bit of a loss, but it uses a lot more confirmation than that. So this entire trade, if we bought on the next candle, sold on this candle, which I'm perfectly fine with doing, we got in at the worst price and we sold at the worst price, would be 17%. If you sold at an average price, you'd be up 20%. If you sold at a really good price, you'd be up 20.3%. All right, so just tune it. All right. Then there's some things like this that you can't really smooth out, but it does a really good job of it. All right, so look at right here, buy, sell on the next candle that it tells you to sell on. If you got in at an average price, you made 0.9%. If you sold at a bad price, you lost 0.3%. But if you sold at a good price, at the best price, you would be up 2%. All right, so that's a pretty big candle, but that's just if you get in at the best prices and at the worst prices, so you can know your reward ratio. All right, so right there, that's 5%. That's really, really decent, but I'm going to show you really quickly how you can almost instantly double your profits. All right, so right here, you can clearly see every single time there's a sell, it goes way down. All right, so sell, way down. So basically, if you're just playing off of statistics, every single time you sell, you can buy the inverse, which is SQQ, and sell when there's the next buy. So on that single trade that you made, um, 18%, you basically added 8.97% to that single trade. And then let's basically say on this trade, 15%, and now you're buying and selling at the same price, and then you basically did half on the way up, on the way down, all right? So you can see on those two trades, you basically doubled the amount of the value next trade. So let's take out your calculator. So first, we're going to do it without the shorting. So we're going to take 10,000 and multiply that by 0.18. Let's just round that up to 19 plus 8, 27% times 27. You would have made $2,700 on that little trade thing right there. And then let's just say it's going up. So then you add 15. So what's it called? So 10,000 plus 2700, 12,000. Now the next trade, multiply that by 0.15. That's $1,900. Now we're going to add that to our 12,700, and you're going to be at 14,000. In those two trades, you basically did 50% of your account value easily, instead of not doing it and you only making 18% and then 15%. You're up almost 50% right now because of those two trades. Now, hold on. So you can do 7.99%. That's on the way down. So multiply that by 0.7. Shoot, I did that wrong. What was the last trade? It's 14,000. 14,605. Now multiply that by 0.07. Alright, you basically made 1,000. You basically did 50% in those 2 trades. So let's add that to the 14,000. You'd be up that much money instead of so you'd be up 15,000 right there. All right. So basically half in 2 trades, you'd be up. Now if you basically went like this, buy. So let's just say you started out with 10,000, and then you multiply that by point times 0.18. That's 1,800 plus 10,000. It's 11,000 on that one trade, and then we're gonna sell on that. So then let's just say plus 0.15. No, times 0.15 plus 11,800. You'd be up 30%, 35% equivalent, basically 35% in those 2 trades. Or you could be up over 50% in those 2 trades. And I think that it is a lot better. So let's just keep on going with that. Now, this is a kind of long video, I know. But the next trade really adds up. So let's just say you sell on the next candle at the worst price, that's 30%. So let's just go calculator. Let's go, let's just say 15,000 because that's where we were before. Times 0.3. Yep, times 0.3, 30%. That is basically 19,500. 500. Now we're going to short it on the way down. So at the same price that we did that, we're going to bring it down to the next candle. That's an up. That basically adds 6% to your entire account value. So times that by 0.06, and you get $1,000. Now, if we add that to our 19,000, 19,500, you'd be up that much, or double 107% in how many days? Since this first trade to the last trade, I don't know, in 48 days, you're up over 107%. So if we do some math, if we do some math, 107 divided by 47, that's averaging 2.276% a day. And that, in my mind, is a lot worth it. Now, let's just see how many trades that it lost on in this point of time. Now, the only reason why I'm sticking to this point in time is because you need to retune it at the start of every month. So since I just tuned it, I need to retune it at the start of every month. So we're going to start it from the start of the month to now, all right? So let's just see where it took a losing trade. Here to here. No, didn't take a losing trade. From here to here, didn't take a losing trade. From here to here, didn't take a losing trade. From here to here, did not take a losing trade. From here to here, it took 1 losing trade if you sold at a bad price, but you could have made 2% on that easily. If you bought and sold, it didn't take an issue. Bought and sold, didn't take an issue. Bought and sold, didn't take an issue. Bought, and we're still going currently. So look it made maybe 1 wrong error, and you only lost 0.3%. Except if you do the math, you're up over 50 frickin' percent. You're up over 180% easily on these trades. Especially this one, like 21% of 20,000 is like 5,000. All right, so that's almost half in this single trade that you started at. So I'm just telling you. I'm just telling you. So you can see it for yourself. Because a lot of people, they don't see it as that. They just see it as fake. All right. So I'm just going to run through the settings really quick, tell you what they all do. So the source is using HL2. I mean, I like low because it has really, really low buys, and if you tune the fine-tuning equation right, you have really good sells too. Um, why did I change that? All right. Oh, yeah. Wait, hold on. It's risk to reward ratio equation. So if I tune this up, you can see that the buys and sells are closer to each other, which means that you'd make less money, but you're risking less also. Sorry, I gotta look at this really quick. Um, all right, so as I tune this up, you can see um, it starts making losing trades above 10, but it risks less money. Um, So I like 3 because that's a very good average. My last trading robot was at a 2. And it was at 2 and then 100. And that was called Apollo 2. And that was all because why the heck not? And I took this trade and I lost on it. All right. So I like it at 3,660. All right. Um, so that's basically how you use it. Um, Also, oh yeah, I forgot to run what the candles mean. So since you're using Helsinki lines, um, the bigger the candle is, the basically more that it's in that direction. So if it's a really big candle like this with a wick at the top, or it's a really really tall green candle, it's a strong upward trend. Then, if there is any wick at the bottom, that's rough. All right, so that's basically saying it's not that as a strong upward trend. So that's a really strong downtrend. That's a not a strong uptrend because look, there are wicks on the top and the bottom, and then you get a kind of doji right there. Wicks on top or bottom, wicks on top and bottom. Oh, we first got our first confirmation. Nope, never mind. And wicks on top or bottom, and it just trades within that channel for a little bit. Um, so if you're in a wait, yeah. So I forgot to run over the candles. So orange is when the computer thinks that it is going to be a pullback, and you can see pullback, either direction. It thinks that it's going to be a pullback. So if it's on the upward trend and there's an orange, it thinks that it's going to be a pullback. Um, and that's just because the way that it's trading. All right, so it's not always correct, but it is nice to see some insight, you know. Man, this is a freaking long video. I'm sorry if you're still watching. You just should learn all this stuff really quick, so please don't skip out. So you can see you buy on the next candle. All right, so dark green. Dark green means that there are so dark green. I gotta zoom in all the way here. Dark green with the red outlining means that it is consolidation. So you can see right here, when the computer thinks that is consolidation, it puts a consolidation thing around it. So it's really not that hard to see. Now, like consolidating, so the computer's not always right, but it runs a bunch of different equations to basically say, is this a pullback? Is this a consolidation? What is this? And it'll plot it out on a chart, so whatever it thinks. All right, so then if it's red, if it's bright red, that means that there's a strong downtrend. If there's like a purplish, which this should be tuned as purple, sorry. Shoot, bright red. So that should be actually a purple. Um, so if it's like a purple, like that, it means that there is not as strong as a downward trend, and it's going to either be just a pullback or a different direction change. Um, so it's whatever. Just think about it. It's going to be all right. Um, oh wait, yeah, I forgot to tell you. So a green, when this green line is up, it means that there's a strong upward trend. And it's basically an SMA line and a ATR trailing stop. So you'll see it, boom, ATR trailing stop. As soon as it breaks, it tells a sell order. Um, and then you can see this whole bottom, if you're on a buy, is so from here to here, you can see it is support. It's the support line that the robot sees. And then the green, this aqua up here, this aqua color, is a basically the target. So that's where the target gains are. So once it tells you to sell, they flip options. So you can see now it tells you to sell. So right on this candle, you can totally see, oh, well, that's the resistance. That's the resistance and no longer the target, and that's the target. And so, that's how it is. Um, yeah, that's pretty much. Also, go watch some videos on Helsinki sheet lines. I'm not really sure how to explain it that well, but it definitely helps a lot with smoothing, and the computer reads it as better too, just because it's Helsinki sheet lines. All right, so I know that was a freaking long ass video, but it is whatever I can to help you guys. Thanks for watching. I know that was a freaking long video. See you later.